Hello everyone, I am CS Vivek Banerjee. I will be taking the today's lecture on fundamental analysis, which is part of security analysis. As you know, security analysis consists of two parts: fundamental analysis and technical analysis. So today I will be taking the fundamental analysis part of the security analysis. Uh, Before going into the fundamental analysis, in today's lecture, I will be covering the concept of fundamental analysis, what fundamental analysis is all about, various parts of fundamental analysis, and I will explain this with the help of various possible examples so that your concept in this area is absolutely clear. So let us begin this lecture on fundamental analysis. Fundamental analysis, what do you mean by that? Analysis of the fundamentals. So what are the fundamentals for which the analysis is taking place? It is basically consists of actually three parts, which is called economy, industry, and the company. It is also called EIC analysis. It is also called as EIC analysis. EIC. And E is for actually economy. I is for industry, and C is for company. I will give you a brief example so you can understand how we'll go through this process. Economic situation. Recently, if you have read the financial newspapers or you have gone through the newspapers regularly, India's GDP growth rate is projected to be 7%. Earlier, it was projected to be 7%, but now the various news which has been coming, it is actually the projection has come down from the 7% to actually 6%. So, and another thing which is going on, that the inflation will be somewhat eased, but actually household expenses, the households are not very satisfied about the, you can say, decreasing inflation. So it affects upon some of the industries. But and another aspect which is going on is that there is recession in the world economy, recession in the USA, recession in the Eurozone. Recently, a news surfaced that Germany is also in the grip of recession. So the global recession will have some impact on the Indian economy. Not much as it was earlier, but it will have some impact on the Indian economy. And because of this, what are the industries which might be affected because of this? Some of the industries which, in spite of this recession, are likely to do well are those industries which in which the government is actually encouraging it. Recently, the government has given huge boost to the infrastructure sector. So the industries which are in the infrastructure sector, that is steel sector, iron ore, cement, some of the real estate companies are likely to do well because of this. So, economy we have covered, the industrial portion with this example, I have covered one example. And now, after this economy and industry, we narrowed it down to the company. It is projected that yes, the steel industry, cement industry, and the iron ore industry, these are likely to do well because of the government's infrastructure push. But it is not possible that all the companies will be able to do well. So the companies, so what are those companies which are likely to be invested by the investors? So for this, a detailed financial analysis and the quality of the management is generally assessed. So in company analysis, two aspects which are very important is that the company's financial analysis, the company's financial analysis, and the analysis of the company's management. Now come to this, please read this first slide. That is fundamental analysis, basically based on the assumption that the share prices will depend upon the future dividend expected by the shareholders. I have given one example of how this EIC analysis, that is economy, industry, and this company analysis is being carried forward. And after this analysis, generally the valuation of the company valuation of the shares takes place. Valuation of companies' shares. Or valuation of the equity shares. While valuing the shares, the investor is most likely to invest in those shares whose prices will likely to increase in the future, or on those companies in which are likely to declare more dividend in future. But the dividends in future will be received some years later, after 1 year, after 2 year, after 3 year, 4 year, 5 years. But the shareholders are investing now at this present moment. So the future dividend will be estimated. For example, previous year the dividend declared is 10. Next year it is projected at 12, 15, and then fourth year it is 20, and so on. But these dividend, that is the dividend at the end of first year, dividend at the end of second year, dividend at the end of third year, this will be received in the future. So while as an investor, I will be investing today. So the present value of these future dividends, that is 12, 15, and 20, will be calculated. And this is calculated, as you know, with the help of the time value of money and a discount rate. It will be discounted with the help of a discount rate to arrive at the present value. So first of all, future dividends are estimated on the basis of the present dividend. Discount rate is estimated, and on the basis of discount rate, the future value are discounted to arrive at the present value. So present value of dividend, future present value is also called the intrinsic value of the shares. So now if you read this first PPT, it will be more clear to you that fundamental analysis based on the assumption that the share prices depend upon the future dividend expected by the shareholders. The present value of the future dividends can be calculated by discounting the cash flows, as in this case, the future dividends, 12, 15, 20 in this example, at an appropriate discount rate, and it is known as the intrinsic value of the shares. So in fundamental analysis, how the investor, while investing in the shares of a company, proceed, he first of all made a, you can say, economic analysis, then he narrowed it down to industry analysis, then company analysis on the basis of company's financial statements and quality of management, and then he does the valuation of shares. How the value of shares is calculated? By calculating the present value of shares or the intrinsic value of share. What it is? Intrinsic value or the present value of equity shares is the present value of cash flows in the form of dividends. Now the question arises that whatever intrinsic value arrives at, how the investor takes decision whether to invest in the shares of that particular company or not. Let us see. For example, the intrinsic value, let us say, come to 100. The intrinsic value of a share come to rupees 100, and the current market price is rupees 90. Okay, the intrinsic value is 100 and the current market price is rupees 90. So as an investor, what will be your decision? Whether you should purchase the shares of that particular company or whether you should sell it. Intrinsic value is 100. It means that there is every possibility that the share prices will increase to 100 in the future. Right now it is 90. मीन्स अभी जो है शेयर की प्राइसेस 90 है, तो फ्यूचर में चांसेस है 100 होने की, तो इसका मतलब शेयर प्राइसेस बढ़ेंगे. अगर शेयर प्राइसेस बढ़ेंगे तो आपको एज ए इन्वेस्टर उसमें प्रॉफिट कमाने का मौका मिलेगा. तो डिसीजन क्या होगा? डिसीजन होगा खरीदने का, दैट इज बाय. सो यू विल बाय इन दिस सिचुएशन. So when the intrinsic value is more than the current market price of share, then the decision will be to buy, and vice versa. For example, if the intrinsic value is less, then the decision will be to sell. Now let us proceed to the next slide. Concept of fundamental analysis. The fundamental analysis is done by examining related economic and financial factors. The fundamental analyst study factors that can affect the security's value, ranging from macroeconomic factors such as state of the economy and industry conditions to microeconomic factors like the effectiveness of the company's management. Now, fundamental analysis, first of all, analyze the macroeconomic factors, such as in this example, what is the GDP growth rate? If the GDP growth rate is good, going on well, and it is projected to be good in the future, then most of the industries are likely to do well. And after analyzing the economy and the industry, then the analyst narrowed it down to the company, that is, what is the financial position of the company, financial situation, and what will be the future financial position will be, and the quality of management. Now come to the next slide. It is related to the intrinsic value. Intrinsic value, according to the fundamental analyst, depicts the true value of a share. A share that is priced below the intrinsic value must be bought, while a share quoting above the intrinsic value must be sold. As I have just discussed that, for example, the intrinsic value is 100 and the current market price is 90. So a share quoted below the intrinsic value must be bought. And let us say the current market price is 110. So if the current market price is above the intrinsic value, the decision will be to sell the shares. Why? Because अभी जो market price है वो 110 है, 110 रुपए है, और इंट्रिंसिक वैल्यू क्या शो करता है कि शेयर प्राइसेस जो फ्यूचर में 100 होंगे, इसका मतलब वो 110 से घट के 100 रह जाएगा. तो फ्यूचर में क्या है, फ्यूचर में अगर आप इसको बेचेंगे तो आपको लॉस होगा एज एन इन्वेस्टर. So investor in this situation will be likely to sell the shares because right now the market price is 110 and there is every possibility that in future it will be come down to 100. So if you do not sell the shares now, it will bring you loss in the future. Next sentence in this slide. Thus, it can be said that the price the shareholders are prepared to pay for a share is nothing but the present value of the dividend they expect to receive on the shares. And this is the price at which they expect to sell it in the future. I will give you a simple example on this, how to calculate the intrinsic and present value, because the detailed calculation of present value or intrinsic value will be taken in the valuation of equity shares, equity valuation topic. So right now I will take a simple example so that you can understand what intrinsic value is, how to calculate it. Let us take the example. Current dividend is 2.5, discount rate is 10.5, growth rate 2%. You will have to calculate the intrinsic value of shares. A simple formula by which the intrinsic value is calculated, it is D0 multiplied by 1 plus G divided by K minus G. So D0 is current dividend. It is 2.5. So 2.5 multiplied by 1 plus G. Growth rate is 2%. Therefore, 1 plus 0.02. It is actually 1 plus 0.02 is 1.02. And it is divided by K. K is the discount rate, which is 10.5%. So it will be 0.105 minus growth rate. So answer comes to rupees 30. It is the intrinsic value or the present value. So if you calculate it right now, the answer will come to rupees 30. Then this intrinsic value is compared with the current market price. Compared with current market price. Compared with the current market price. So my question is, your current market price is 40. Intrinsic value you have calculated 30, the current market price is 40. So what will be your decision? If you are holding the shares, do you want to sell it, or as a new investor, you want to purchase the shares of the company? The answer will be to sell the shares, because अभी जो है शेयर की प्राइस 40 है, पर इंट्रिंसिक वैल्यू क्या डिनोट करता है कि फ्यूचर में शेयर की प्राइस 30 होगी, उसको मतलब फ्यूचर में वो 30 से 40 कम होगा, तो उस समय अगर आप बेचोगे फ्यूचर में तो आपको लॉस होगा। तो आपका डिसीजन क्या होगा? बेचने का। अभी यार बेच के निकल जाएंगे तो आपको फ्यूचर में लॉस कम होगा। तो एज एन इन्वेस्टर द डिसीजन विल बी टू सेल। ओके, okay. Now come to the next slide. It is very essential to concentrate on the underlying business performance. So over the long term, the stock prices of fundamentally strong company tend to appreciate the good companies. The examples are given, that is Infosys Limited. The name of the companies are given: Infosys Limited, TCS, Page Industries, Eicher Motors, Bosch India, Nestle India, TTK Prestige. These are all very good companies, and they declare dividend on a consistent basis year on year, so that the investors can be satisfied, and their share prices do not show any drastic fall or any drastic increase. And they have also managed to, you can say, score 15 to 20% compounded annual growth rate year on year basis for the last 10 years or so. Now come to the next slide. Two very important things have to be considered before beginning the fundamental analysis, that is economy, industry, and company analysis. First is general observation, and the second is moat. What do you mean by general observation? If you go through the newspapers, if you go through the various news channels, you will hear or likely to read that what are the companies who are actually doing well. So if you have gone through the newspaper recently, you know that the life insurance corporations profit have increased. The profit of, you can say, Oil India has increased. The profit of, you can say, Glenmark have increased, but the profit of Axis Bank have come down. The profit of, you can say, Trident has come down. So these companies have not done well as they have expected. So these are some of the general observation, and general observation also includes the have a go through to the financials of the company. For the last 10 years or so, what is the financial position of the company? What is whether the company is earning profit or loss? Whether the company has good liquidity or not? Whether the company has good solvency? These are some of the general observations what you are hearing about a particular company. Second, another important factor is moat. What is moat? Moat is basically a competitive advantage which a company has over the other companies, other competitors. A company has over its competitors. A classic example is the Eicher Motors brand Royal Enfield bikes. Let us take a hypothetical example that the price of brand Royal Enfield bike is 1,50,000. If the prices of brand Royal Enfield bikes increase from 1,50,000 to 1,60,000, will it stop the buyers from purchasing this bike? The answer is no, because it has a brand value, it has a moat. The customers are fascinated by this bike. So in spite of increasing 10, 20, 30,000, it will not affect the buyers. जो Enfield बाइक खरीदना चाहते हैं उसको जरूर खरीदेंगे. Now come to the first part, that is economic analysis. Just go through the slide and then I will take the examples also. Macroeconomic factors, for example, historical performance of the company in the past and present expectation in future. Just give me a second. Okay, macroeconomic factor, for example, historical performance of the company in the present and past, present, and expectation in future. Historical performance of the economy. The economy was not doing well during the COVID times, but the economy, Indian economy has recovered. It is doing well. In the future, it is expected to grow according to RBI, but some of the experts have considered that the GDP growth rate may not grow as fast or as it is projecting. Growth of different sectors of the economy in future with signs of stagnation, degradation at present to be assessed while analyzing the overall economy. Uh, some of the sectors which have been given push by the government, that is the recently some of the sectors which I have just mentioned, that is which are the sectors which are given push by the government due to infrastructure push: steel, cement, iron ore. Some of the real estate companies are likely to do well. And trends in people's incomes and expenditure reflect the growth of a particular industry or company in future. It is very important because if the people's income have increased and they are likely to make more expenditure, it will definitely have a bearing on the growth of that particular industry or company. For example, the demand for luxury homes and luxury cars, the demand for uh, luxury homes and the luxury cars both have been increasing, while the demand for the affordable houses and affordable cars are not increasing that much. What is the reason for this? The reason is that the growth of the high HNIs, high net worth individuals, growth recently. They're increasing at 20-22% every year. So since the high net worth individuals whose income are yearly income more than 1 crore have high disposable income in their hands, so they are likely to afford these luxury homes and luxury cars. That is why the demand for luxury homes and luxury cars are increasing. So, the people's incomes and expenditure reflect the growth of a particular industry and company. For example, the real estate companies which deal in luxury homes or the automobile companies which deal in luxury cars are likely to do well. Another factor is that the last line of this slide, that consumption affects corporate profits, dividend, and share prices in the market. Uh, Consumption, obviously, if the consumption increases, it means the if the people have income in hand, income is increasing, it will obviously prompt them to consume more. So people, if people are consuming more, for example, the people are consuming the Britannia Marigold biscuit more, there is a 10% increase in consumption of Britannia Marigold biscuit, for example, from the last year. So it will obviously increase the corporate profit of the Britannia, and Britannia will be more likely to declare more dividend to the shareholders. And if they declare more dividend to the shareholders, that will obviously increases their share prices also. Now, what are the factors which affect the economic analysis? First of all, growth rate of national income and the uh, related measures. And now, national income, which is obviously by the GDP growth rate. So, if the GDP growth rate increases, it will have an effect on the entire sector. Because what is the GDP growth rate? Is GDP growth rate is actually the market price of the all the goods and services produced in the economy. So if the GDP growth rate, which is projected to be 6%, 7%, if it is grown, if it is likely to grow at 6 or 7% in the next 2 to 3 years, it will obviously have a positive effect on the most of the industries, and they are likely to do well. Now, growth rates of the industrial sector. Because of the government's recent infrastructure push, the sectors, as I have already discussed, are likely to do well are the steel sector, the cement sector, the iron ore sector, and some of the real estate companies. Another in the aspect is that some of the industries which are likely to do well are those industries which have availed the government PLI scheme, the government's PLI scheme, that is production linked production linked incentive schemes, under which the government gives subsidy to the local manufacturers and domestic manufacturers. So if one of the domestic manufacturers are, for example, manufacturing chips which are used in the laptop, and they are getting some, you can say, incentive from the government, subsidy from the government, so that company is likely to, or that industrial sector is likely to do well. So these have also bearing on the, you can say, on the investor, which is analyzing the taking place the fundamental analysis. Another aspect, the company's sector which is likely to do well is the EV sector, that is electric vehicle. The electric vehicle sector is likely to do well because the world over, and India also, the government is giving a big push to the electric vehicle sector. So the auto industry, which is actually manufacturing, or the companies under the auto industry which is manufacturing this electric vehicles on a big scale, are likely to do well. So this point explains this growth rates of the industrial sector. Now come to inflation. As you know, some amount of inflation, or the modest amount of inflation, is actually good for the economy, because by inflation the prices of goods and services will increase, and that ultimately benefits the whole industry. आई एम ऑडिबल ना? मेरी आवाज ठीक से आ रही है ना? अशोक जी, मेरी आवाज ऑडिबल है ना? ठीक से आ रही है ना? ठीक है, ठीक है. So modest amount of inflation is actually good, but if the inflation is too much, so too much inflation is actually bad. So too much inflation is actually bad, because it will ultimately affect the economy, especially the rural economy. Because if inflation is more in case of food products, for example, wheat, rice, mustard oil, so consumption of these will be reduced in the rural area, because where the people have less income at their hands. So this way, the FMCG companies, or the companies manufacturing the food products, will likely to be affected. Now come to the monsoon. Monsoon is also a very important factor. As you have read in the various newspapers that earlier it was predicted that the monsoon will not be good, but excuse me, but now it has been predicted that the monsoon will be normal. So if the monsoon is normal, it actually affects the entire economy, or most of the industries, and it affects the basically the agricultural based industries, the agricultural based agriculture based industries. So monsoon do have a very effect on the mindset of the investor, whether to invest in this particular monsoon is not good, then whether to be hold back or to invest in the shares of the company. So these are the basic factors which affect the economic analysis. Now come to the various techniques which are used in the economic analysis. And the first of all is anticipatory surveys. Anticipatory surveys help the investors to form an opinion about the future state of the economy. So a survey is conducted and it basically includes the expert opinion on the construction activities, expenditure on plant and machinery, and the levels of inventory. And all these have a definite bearing on the economic activities. And in this, the future spending habits of consumers are also taken into account. But the anticipatory surveys are cannot be absolutely true in all the circumstances. So a caution should be taken place while doing this anticipatory survey because it is mainly based on a forecast. Second technique is second and very important technique is barometer indicator approach in economic analysis. So what the barometer indicator approach tells us, various indicators are used to find out how the economy shall perform in the future. So indicators have been classified as the leading indicator, roughly coincidental indicator, and the lagging indicators. So what are the leading indicators? Leading indicators tells us what the hmm, sorry, what is going to happen in the economy, what is going to happen in the economy in terms of GDP, in terms of GDP, industrial production, interest rates, so leading indicators tells us what is going to happen in the economy in terms of GDP, industrial production, and interest rates. So it basically predicts the path of the economy. It predicts the basically predicts the path of the economy. Leading indicators. Now come to the barometer. Second is the coincidental indicators. Coincidental indicators. So what the coincidental indicators actually tell? The coincidental indicators actually tells about what the economy is. What the economy is. Okay, leading indicators tell us what is going to happen in the economy, and the coincidental indicators tell us what the economy is. So, can you tell any indicators which coincide? The example is high personal income coincide with a stronger economy. High personal income coincides with a stronger economy. What are the characteristics of a stronger economy? Characteristics of a stronger economy is that the GDP growth rate is more. So if the GDP growth rate is more, it means the most of the companies or most of the industries are doing well. If most of the industries or most of the companies are doing well in terms of their profitability, in terms of their growth, it means they are likely to employ more and more people. If more people gets employed and the employment rate is going up, it means more people are getting salary, more people's income are getting increased. So by this income, they are likely to purchase more goods. If they are likely to purchase more goods or likely to avail more services, then it will help those industries and those services companies which are providing those services. So overall, the economy prospers, and this leads to actually high personal income. So if there is a stronger economy, there will be high personal income on the part of the people. So these are basically the coincidental indicators, and by these indicators, you can judge how economy is going on. So by either of these, so if the most of the people have high personal income, you can have an idea that is the economy is stronger. That is why there is a high personal income. Recently, most of the people do not have high personal income. The current situation is, if we analyze that, the growth of HNIs or the high net worth individuals are going up, and it is going up at the rate of approximately 20% every year. So high net worth individuals who have income of about more than 1 crore are doing well. So these people have more disposable income at hands, so they are splurging it, or they are investing or utilizing this money in the purchase of luxury homes and luxury cars. So this is what coincidental indicator says, is that the increase in the, you can say, high net worth individuals coincides with the increase in the demand of the, you can say, luxury housing and the luxury cars. Now come to third point, which is a lagging indicator. Which is a lagging indicator. What the lagging indicator tells us, lagging means the after effects of the leading indicator. It means whatever is taking place in the leading indicator, ये अभी हो रहा है कि अच्छा, whatever is taking place in the leading indicator and coincidental indicators are reflected in the lagging indicators. So whatever has taken place in Whatever has taken place in leading indicators and coincidental are reflected in lagging indicators. I will take an example. Sir, what is the lagging indicator? Whatever has taken place in the leading indicator, coincidental indicators are reflected in the lagging indicators. What are leading indicators? Leading indicators means what the economy is likely to be in the future in terms of GDP growth rate, in terms of interest rate, in terms of employment. These are the leading indicators. And the coincidental indicators means uh, effect of anything which is indicator, contraindicator, because as we have seen that the growth in the personal income, disposable income, actually coincides with the stronger economy. And lagging indicators tell us that whatever has taken place in leading indicators and coincidental indicators are reflected in it. I will take an example that lower GDP growth rate and lower industrial production, lower GDP growth rate and lower industrial production leads to high unemployment rate, leads to high unemployment rate. So this is the lagging indicator. So by these are the various methods by which the, you can say, the economic analysis is done. So GDP growth rate is lower, industrial production lower, then it can be ascertained that it leads to higher, and leads to high unemployment rate. Another lagging indicator is that supply chain disruption leads to higher prices. Supply chain disruption leads to high prices. As you have experienced in the COVID times that supply chain, where there's supply chain disruption due to reduced manpower, and because of supply chain disruption, the, you can say, the goods are not able to reach the places where it should be, and this causes a high demand. So if demand is high and the supply is less, it will lead to high prices. So now come to back to the PPTs. So these are the you can say the techniques used in economic anticipatory survey, barometer indicator approach, and the last one is economic model building approach. In this case, you can say a total demand is estimated. I will do it here as there is some space. Total demand is estimated on the basis of GDP growth rate, inflation, interest rate. And on this basis, total demand is estimated. On this basis, GNP is forecasted. GNP is gross national product. You must know what is the difference between GDP and GNP. GDP is the market value of all goods and services produced in the economy. So if we add the net income from abroad to GDP, it will be GNP. So GNP is GDP plus the, you can say, net income from abroad. So first of all, the total demand is estimated. On this basis, the GNP is forecasted. Then the individual components of GNP is estimated. Individual components of GNP is estimated. What are those individual components? So individual components are government expenditure, private expenditure. So these are actually individual components are estimated. And then all those individual components are added to get a forecasted GDP. And then this forecasted GDP is compared with the GDP estimated by some expert. And then this consistency is monitored. So in economic building approach, how this is being done? First of all, total demand is estimated. Then on this basis, the GNP or the gross national product is forecasted. And then the individual components of this GNP is estimated. For example, government expenditure, private expenditure, all these individual components are added to get the forecasted GDP. Then this forecasted GDP is compared with the forecasted GNP is compared with the GNP estimated by some expert consultant. And then this comparison is the basis for the consistency in future also. So we have gone through this economic analysis. The next, we come down to industry analysis. So when we get an estimate of, yes, what is the position of the GDP, whether it is likely to be increase in the future, reduce in the future, what is the world economy is doing presently? The world economy is in recession, so it will have some impact on the Indian economy as well. What is the inflationary situation? Most of the experts are suggesting that the inflation will ease down. What will be the unemployment position? Unemployment is more or less is present. There is a mass layoff in the e-commerce sector. Some of the industries, so these are basically the economic analysis we done. What is the economy is and what the economy is likely to be in the future. On this basis, the industry analysis is taken place. So basically, what are the factors which actually affect the industry analysis? First is the product life cycle. Now, what is it? Product life cycle means life cycle of a product can be divided into three parts: the expansion stage, the maturity stage, and the stagnation or the declining stage. So it can be, you can say, product life cycle can be of three parts. That is expansion stage, maturity stage, and the stagnation stage. Stagnation oblique declining stage. Now, I will correlate all these points with the recent scenario in the Indian economy. What are the sectors which are in the expansionary mode? The first which comes to your mind is the EV, that is electric vehicle sector. The government is giving a big push to the electric sector, and the companies in the infrastructure sector, steel, cement, and the last but not the least in the expansion stage are in the AI, that is artificial intelligence. So those sectors which are in the artificial intelligence and robotics, for example, manufacturer of drones, for example, are likely to do well, seeing the current scenario. Now, the maturity stage. What are the industries which are in the maturity stage? Come to mind IT sector, pharmaceutical sector, FMCG. So these are the sectors which automatically comes to mind. Who are in the maturity stage, they do not have much growth opportunities. Some of them are sitting on a huge pile of cash. For example, the IT industries, and they are utilizing their cash by resorting to buyback or giving dividend to the shareholders. Now come to the stagnation or declining. What are the industries which are in the stagnation stage or declining stage? The first which comes to mind is BPO, business process outsourcing. Some 10, 15 years back, the BPO sector was in the limelight. The young graduates who speak good English are likely to go to the BPO sector, which they get a decent enough salary. And BPO sector at that stage was mushrooming, but now it is in the stagnation or the declining stage. And the second sector, which you can say in the stagnation and declining, is the CDs. Another sector which will not say that it is in the, it will, it has faded out and it will decline continuously. One is the, you can say, entertainment sector. Entertainment sector, for example, PVR. It is actually लॉस मेकिंग, मतलब पीवीआर को लॉस हो रहा है कंटिन्यूअसली इस वजह से, क्योंकि जितने ज्यादा लोग पिक्चर देखने चाहिए जाने चाहिए उतने नहीं पहुंच रहे हैं। एक तो ओटीटी प्लेटफॉर्म पे भी हैं लोग, पिक्चर जल्दी आ जाती है, वहाँ पे भी अच्छे कंटेंट लोगों को देखने के लिए मिल रहे हैं, इसलिए वहाँ पे भी देख लेते हैं। और स्पेशली जो छोटे सिटीज में बहुत सारे जो है सिनेमा हॉल बंद करने पड़े पीवीआर को और आईनॉक्स को, इसी वजह से। सो एट प्रेजेंट यू कैन से दीज एंटरटेनमेंट कंपनीज, फॉर एग्जांपल पीवीआर, आईनॉक्स फॉर एग्जांपल, is in the declining stage. Now come to the second point, which is demand supply gap. Demand supply gap affect the particular industry. If the demand for a product is more and the supply is less, then it is actually must be actually be profitable. For example, in the COVID time when lockdown was imposed in 2020, about it was March 2020, suddenly there was a demand for the sanitizers and the mask. So on account of happening of certain events, the demand for certain products may increase drastically. If the government, excuse me, if the government is coming out with a huge push to the infrastructure sector, the industries which are affiliated to it, that is steel, cement, are likely to, I don't know, real estate companies, definitely are likely to do well. Now come to the barriers to entry. Barriers to entry is also a very important point. industries which are facing barriers to interest entry, or their state of competition in the industry is less. So I will actually compare this barriers to entry and state of competition in the industry in the same way. Let us take an example of mobile services company. Mobile services company such as Geo. Geo is leading the way. You can say Airtel is distant second, and Vodafone Idea is you can say in disarray, or you can say nothing in the picture right now. So since the barriers to industry in this sector is less, the Geo is likely to do well, but it is actually not beneficial to the other companies in this industry. So barriers, while doing industry analysis, this particular industry is, you can say, the not doing well, except one or two companies which are in the monopolistic situation. For example, Geo in this case. In case of and state of competition, I will now take the state of competition. State of competition in, you can say, this opposite to mobile services companies is the mobile companies, actually mobile handset companies. Mobile handset companies, so for example Oppo and Vivo and Samsung and this Redmi are all doing well, and there is a huge amount of competition. So state of competition in this, the mobile companies are good, and this ultimately affect their urge to increase their ability, competitive ability, and to increase their profitability. So the state of competition, where the state of competition is good, the investors are most likely inclined to watch out for those industries where the state of competition is more, and likely to avoid those industries where the state of competition is less, or there is barriers to entry. Now come to government attitude. Government attitude is also a very important factor when analyzing an industry, which industry is likely to do well. As you know, the recent infrastructure push gives the sector, steel sector, cement, are likely to do well. And the huge push by the government in the electronic vehicle sector. So the auto companies which are in the electronic vehicle sector, those industries are likely to do well. The government is now reducing the, trying through the RBI, trying to reduce the NPAs in the banking sector. So government attitude to reduce NPAs or the non-performing assets in the bank, it likely to give a push to this banking sector also. So government attitude plays a very important part in the analysis of a particular industry. So the investor can make out, yes, the government attitude is, government is giving a huge push to the infrastructure, therefore the steel, cement, iron ore are likely to do well in the future. Government is giving a huge push to the electric vehicles, so electric vehicle sector is likely to do well in future. The government is trying to reduce the non-performing assets of banks, so banking sector is likely to do well. Now come to another important point in the industry analysis, which is cost conditions and profitability. While going through the financial statements of a particular company, the investor should give the cost portion a priority. कॉस्टिंग में जो चीजें इन्वेस्टर को देखनी होती है वो है रॉ मटेरियल, कॉस्ट क्या है, रॉ मटेरियल, लेबर कॉस्ट और ओवरहेड, ये तीनों मेन एक्सपेंसेस के हेड होते हैं. तो इन तीनों पे अगर कॉस्ट बहुत ज्यादा नहीं है, देन द मोस्ट ऑफ द कंपनीज इन दिस इंडस्ट्रीज are likely to do well on the cost aspect. As you know, if the cost is less, then if the expenses of the companies are less, or the expenses of most of the companies in that particular industry are less, then they are likely to, you can say, earn more profit in the future. So their profitability aspect will automatically be good if their cost aspects can be controlled. The profitability factor can be judged with the help of sales, gross profit, return to capital employed ratio, and return to equity ratio. Sales, gross profit, return on capital employed, return on equity. So I will give you a brief example that you can go through a particular company and see the sales, or you can go to a particular industrial sector and go through the sales, gross profit, return capital employed, and ROE. So some sort to get some certain idea about the profitability situation. Let us take the example of Tata Consultancy Services. See, the compounded sales growth of Tata Consultancy is for 10 years, it is 14%. So 14% growth, sales growth rate is good. Anything above 10% or anything above 10 to 15%, 20% is good enough for the last 10 years figure. Compounded profit growth is 12%. It is good. And if you see the return on equity for the last 10 years of TCS is 39%, it is also good enough. Means whatever has been equity shares has been invested are resulted into profits. Now see the return on capital employed, ROC. Return on capital employed is 59.1%, about 60%. So whatever capital is employed by TCS is actually resulting into profits. So this company is showing a very good profitability aspect. Now come to technology and research. Recently, the government is giving a big push to the technology and research, basically in the AI, that is artificial intelligence. Artificial intelligence is now being employed in almost all the sectors, be it you can say logistics, pharmaceuticals, any industry. And basically the banking sector also. Some time ago, the ICICI bank spokesperson has recently said that almost 2 million banking transactions per working day are done by the software robots. So ICICI Bank has himself said that the artificial robots or software robots are doing 2 million banking transactions per working day. So this is a technology and research gives a huge push to the particular industry. So if you see that as an investor, that the particular banking sector is adopting artificial intelligence in a big way, and that is actually affecting the profitability, then that industry has to be considered, can be considered by the investors. Now the techniques used in the industry analysis. regression analysis and the input output analysis. Regression analysis is basically a statistical technique, so I will not delve deeper into it. I will give you a brief example so that you can understand it, how this regression analysis is used in industry. Regression, as you know, simply means you can say find the value of a dependent variable on the basis of some independent variable. For example, forecasting of sales on the basis of the GDP growth rate. So here the GDP growth rate is basically an independent variable, and because of the high GDP growth rate, the company sales or the industry sales increases, and which is actually a dependent variable. So by regression analysis can be calculated that to what extent or how the GDP growth rate is actually resulting in the increase in the sales. So this is what the regression analysis is all about. Now come to the input and output analysis, which is also very important. I will take an example so that you can understand this, the input output analysis. Input output analysis means finding about the, you can say, interdependence between various sectors of the economy. How any, you can say, increase in, you can say, demand or sales of one sector can affect the other sector. That is what input output analysis is. Let us take an example. In the manufacture of let us say manufacture of car, let us take car as output. Let us take car as the output of the final product. So in the manufacture of car, various inputs are used. These inputs are steel, aluminium, plastic, electronics. So all these are used in the manufacture of car. So if the prices of you can say steel increases, it also affects the you can say the prices of the car, because the steel is used in car. Or if the prices of say plastic comes down, it will also affect the price of car to a certain extent. So this is actually the primary impact. This is the primary impact. So there are three impact in case. Now come to the secondary impact of input output analysis. The sectors which are doing well, for example, the steel sector. The steel sector is doing well, or steel sector has showing good profitability, then more and more workers will be employed. And these workers will likely to get more salaries, and they will, you can say, utilize those salaries in purchasing of further goods. And that is, it is the, you can say, the tertiary impact. Tertiary impact or the third impact. Purchase of goods by workers. So in input, what is the input output analysis? Input output analysis is the method of analyzing the you can say relationship between the various sectors, so that investors can judge that which sectors to concentrate. Let us say he analyzes the car. So car is, you can, if you take the car as a, you can say, as output, So in the manufacture of car, you know that there are various inputs are used: steel, aluminum, plastic, electronics. In the prices of any of these will actually affect the prices of the car also. So this is the direct impact of the primary impact. Now, what is the secondary impact? Secondary impact that, for example, with increasing sales in the car, uh, in order to manufacture more car, because the sales has been increases, the more workers are employed. So if more workers are employed, this is a secondary impact. What will be the third impact? If more workers are employed, they are likely to get more salary, and they will utilize those salary in the purchase of other goods, or you can say with the salary in the purchase of cars. So by this, so this will be the tertiary, third impact. So by this third impact, the sales of car will also increase, because the workers which are getting salary are utilizing this salary in the purchase of cars. So this is what is input output analysis is all about. So these are basically the techniques in industry analysis, regression analysis, and input output analysis. Now come to the very important aspect, company analysis. Just go through the first slide. It says that economy and industry framework provides the investor with proper background against which shares of a particular company are purchased. This requires careful examination of the company's qualitative and quantitative factors. So once an economy and industry analysis is made, that is, what is the GDP growth rate? What will be the GDP growth rate in future? What will be the inflation? What is the demand? What will be the unemployment rate? What will be the consumption pattern? So all this, and when it narrowed down to industry, that which industries are likely to do well because of the attitude of the government, of the infrastructure push of the government, the analyst or the fundamental analyst, you can say, narrowed it down to the company analysis by analyzing the company's financials, analyzing the company's financial statements, and qualitative aspect. Qualitative aspect means the management analysis. It is very, very important. It is not less important than the financial analysis. So after the economy and industry analysis, the investor, before purchasing the shares of a particular company, narrowed it down to company analysis by analyzing the company's financial statements and the quality of the management. Now come to the various aspects of the company analysis. The first is net worth or the book value. Net worth or book value, what is net worth? Net worth is the company's equity share capital plus preference share capital and reserves and surplus. So what is related to the book value? Book value is basically calculated by, that is, net worth divided by the number of shares. So on the basis of book value, the shares cannot be purchased, because book value depends upon the historical factors, because whatever figure has been given are from the past. Now come to another very, very important factor in company analysis, which is sources and uses of funds. So you can also narrow it down to cash flow analysis, sources, uses of fund, or cash flow analysis. And it forms a very vital part in making the investor make an investing decision. तो कोई भी इन्वेस्टर इन्वेस्ट करने से पहले वो एक कैश फ्लो एनालिसिस जरूर करता है कि कंपनी की कैश फ्लो स्टेटमेंट कैसे है. अगर कंपनी के पास अगर कैश ही नहीं है, उस कंपनी में इन्वेस्ट करने से कोई फायदा नहीं. तो कैश फ्लो एनालिसिस एक बहुत इंपॉर्टेंट जो है वो फैक्टर होता है किसी भी इन्वेस्टर के लिए, जब वो फंडामेंटल एनालिसिस करता है किसी भी कंपनी का. कैश फ्लो स्टेटमेंट, कैश फ्लो स्टेटमेंट में आपको मालूम है, एक फर्स्ट ऑफ ऑल इट इज कैश फ्रॉम ऑपरेटिंग एक्टिविटीज, and then cash from financing activities, and then the cash from investing activities. जो कैश फ्रॉम ऑपरेटिंग एक्टिविटीज है वो सबसे ज्यादा इंपॉर्टेंट होता है, बिकॉज ऑपरेटिंग एक्टिविटी मीन्स कंपनी के ऑपरेशन है। तो कैश फ्रॉम ऑपरेटिंग एक्टिविटीज कैसे कैलकुलेट करते हैं, आप थोड़ा सा इसको रिकैप कीजिए। जो नेट प्रॉफिट होता है, नेट प्रॉफिट के फिगर्स में से जो नॉन कैश एक्सपेंसेस ऐड करते हैं और जो नॉन कैश इनकम्स है उनको हम माइनस करते हैं, फिर वर्किंग कैपिटल का एडजस्टमेंट करते हैं, तो वो हमारा आता है कैश फ्रॉम ऑपरेटिंग एक्टिविटीज। तो कैश फ्रॉम ऑपरेटिंग एक्टिविटीज क्योंकि हमारे नेट प्रॉफिट से रिलेटेड है, ये सबसे इंपॉर्टेंट फैक्टर होता है। तो इसका मतलब कंपनी जो भी प्रॉफिट अर्न कर रही है वो एक्चुअली कंपनी के पास वो कैश में होना चाहिए। तो इसका मतलब क्या हुआ कि कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटीज जो कंपनी का पॉजिटिव होना चाहिए। कैश फ्लो फ्रॉम ऑपरेटिंग एक्टिविटीज इन in a particular company should be positive. So an investor, before investing in a particular company, should see that the cash flow from operating activities is not a negative figure, it should be a positive figure. Cash flow from financing activities can be, in most cases it is negative. Why? Because the company, in order to expand itself, may borrow money in the form of loan, it may issue debentures, it may issue bonds, it may issue shares. So अगर बोरो करके पैसा कंपनी के पास आ रहा है तो उसकी वजह से जो है कैश तो बढ़ रहा है, पर वो नेगेटिव कैश तो कंपनी के पास आ रहा है, पर है कि वो कैश जो है कंपनी को वो वापस करने पड़ेगा अल्टीमेटली। सो फाइनेंसिंग एक्टिविटीज, कैश फ्लो फ्रॉम फाइनेंसिंग एक्टिविटीज इज, you can say, is more, is should not be in the it can be in the negative figure. Now come to investing activities. The investing activities, cash flow from investing activities means whatever the company is investing. If a company is investing fixed assets, whatever cash is going out, so it is. So it may be positive or it may be negative, positive or negative. It does not matter. But the final net cash flow statement, should be positive. So the two important aspects which an investor should watch out for is that the cash flow from operating activities should be positive and the net cash flow should be positive also. Now come to cross-sectional and time series analysis, the C part. Cross-sectional and time series aspect. In this cross-sectional time series analysis, basically the fundamental analysis see the compare the financial statements of two or more firms, or it also compare a firm against some benchmarks such as ratio analysis or common size statements. So in the time series analysis, cross-section analysis, either it compares its profitability or its sales figure with any other company in the industry, or it does a cross-sectional analysis by way of you can say ratio analysis and common size statements against some benchmark figures. Now come to the size and the ranking. Size and the ranking, I will give a brief example. One can go through the industry and can judge the size and rankings of a particular company. And on that basis, he can take a decision. तो size and ranking देख के कंपनी को वो अपना डिसीजन ले सकते हैं कि इस पर्टिकुलर कंपनी के शेयर्स को खरीदना है कि नहीं खरीदना है. I will show you a practical example. Let us take the case of Tata Consultancy Services. Now take his peers. Spears, you can see that the name, that is TCS. I hope you are able to see this. TCS, Infosys, HCL Technologies, Wipro, Mindtree, Tech Mahindra. These are all in the IT software industry. And these are the companies under the IT industry. You can easily see that TCS is the largest company. Its sales quarter, if you see that this column, that sales quarter is 59,162 crore. And it is Infosys is a distant second, then comes HCL and Wipro. Mindtree and Tech Mahindra are comparatively smaller companies. So on this basis, the investor can compare the size of a particular company in a particular industry. Now comes to the growth record. Growth record is also a very important factor. And what are the factors which are considered in growth? किसी कंपनी की ग्रोथ अच्छी हो रही कि नहीं हो रही है, इसका जो डिसीजन, इसका निर्धारण जो है पर्टिकुलर इन्वेस्टर कैसे करता है वो ऑन दिस इन्वेस्टर क्या करेगा, सेल्स की ग्रोथ रेट को देखेगा, नेट प्रॉफिट की ग्रोथ रेट को देखेगा, ईपीएस देखेगा, रिटर्न ऑन कैपिटल एम्प्लॉयड देखेगा, रिटर्न ऑन इक्विटी देखेगा, और वो कंपनी की नेट ब्लॉक को भी देखेगा, कंपनी की फिक्स एसेट्स को भी देखेगा कि पर्टिकुलर अगर फिक्स एसेट में अगर इंक्रीज हो रहा है तो वो सेल्स में भी रिफ्लेक्ट हो रहा है कि नहीं, वो कैपिटल एम्प्लॉयड में भी रिफ्लेक्ट हो रहा है कि नहीं हो रहा है. तो लेट अस सी एन एग्जांपल. एक एग्जांपल से इस चीज को अच्छी तरह से समझते हैं. टेक द केस ऑफ टाटा कंसल्टेंसी. नाउ टाटा कंसल्टेंसी में इसकी जो यहाँ पे कंपाउंडेड सेल्स ग्रोथ इज 14% फॉर द लास्ट 10 years. कंपाउंडेड प्रॉफिट ग्रोथ इज 12%. रिटर्न ऑन इक्विटी 39%. Return on capital employed is 59.1%, which is good. Now come to the balance sheet, that is a fixed asset. If you see, the fixed assets is growing every year. The fixed asset is growing every year. And the company's capital is also going every year, the net worth. It means the net worth has been utilized in the fixed assets, and whatever has been utilized in the fixed assets results in the increasing sales. तो कंपनी की सेल्स भी आप अगर देख, if you see that company sales has also been increasing every year. So March 2022 it was 191,754, and March 2023 it is 225,458. So the company is showing a good growth record. Now, okay, now come to financial analysis. Student, this financial analysis is also a very, very important part of company analysis. कि कंपनी की फाइनेंशियल सिचुएशन कैसी है. तो कंपनी की फाइनेंशियल सिचुएशन को हम कैसे एसेस करते हैं? तो कंपनी की फाइनेंशियल सिचुएशन को हम तीन तरह से इसको हम एसेस करते हैं. पहले प्रॉफिटेबिलिटी, लिक्विडिटी, और सॉल्वेंसी. सॉल्वेंसी मीन्स कंपनी की लॉन्ग टर्म लिक्विडिटी क्या है. और एक और एस्पेक्ट जो इंपॉर्टेंट है, जो कि इससे रिलेटेड है लिक्विडिटी से, कंपनी की कैश फ्लो. तो चारों एस्पेक्ट जो है फाइनेंशियल एनालिसिस में इंपॉर्टेंस रखता है. लेट अस टेक एन एग्जांपल एंड ट्राई टू अंडरस्टैंड दिस. Take this example of Tata Consultancy Services. First, profitability. As I have discussed this before, company's return on capital employed means जितने भी कंपनी कैपिटल लगा रही है उस पर रिटर्न 59.1% मिल रहा है. कंपनी की जो सेल्स ग्रोथ है पिछले 10 साल में 14% है, विच इज गुड इनफ. एनीथिंग अबव 10%, 15% इज गुड. कंपनी की प्रॉफिट ग्रोथ लास्ट 10 ईयर्स में 12% है, विच इज गुड। कंपनी की इक्विटी मतलब जितना भी नेटवर्थ कंपनी पे लगाया जा रहा है वो उस पे कंपनी अच्छा प्रॉफिट दे रही है 39% का। ये है कंपनी की प्रॉफिटेबिलिटी एस्पेक्ट। कंपनी का ईपीएस वगैरह भी देख लेते हैं, कंपनी का ईपीएस भी कॉन्स्टेंटली वो हर साल इंक्रीज हो रहा है। नाउ कम टू कंपनीज लिक्विडिटी एस्पेक्ट। ऑन लिक्विडिटी एस्पेक्ट द थ्री एस्पेक्ट आर वेरी इंपॉर्टेंट। हम लिक्विडिटी में क्या देखते हैं? लिक्विडिटी में देखते हैं कंपनी का इंटरेस्ट कवरेज रेशियो एज एन इन्वेस्टर। इंटरेस्ट कवरेज रेशियो, करंट रेशियो और लिक्विड रेशियो। लिक्विड रेशियो जिसको कि क्विक रेशियो भी कहते हैं। इंटरेस्ट कवरेज रेशियो वैसे कोई हार्ड एंड फास्ट रूल नहीं है, देर इज नो हार्ड एंड फास्ट रूल इन इट। द इंटरेस्ट कवरेज रेशियो शुड at least be thrice. What is the formula of the interest coverage ratio? It is EBIT upon interest. So this EBIT should be at least thrice of the interest, at least. Current ratio, you know, it should be 2:1, and liquid ratio it will be 1:1. Now, let us take the example again in case of TCS. Now, let us see, first is interest coverage ratio, कि एक्चुअली ईबीआईटी जो इंटरेस्ट को ठीक तरह से कवर कर रही है कि नहीं, मतलब 3 गुना से ज्यादा कवर कर रही है कि नहीं कर रही है, देखते हैं। Now, you see the interest. Where is here? It is interest. Interest is increasing every year, but interest in, if you see the March, please see the March 2023 figure. The interest is 779. And if you compare this interest with the operating profit figure, which is of March 2023, March 2023 में operating profit figure is 59,259 and interest is 779. So interest is much less. This EBIT or operating profit figure is easily covering the interest expense. So company's liquidity situation in this aspect is good. Now current ratio, it should be at least 2:1. It is not a hard and fast rule, but it depends on company to company, but generally it is considered as 2:1. Company's other assets means company's current assets is 83. If you please look at the figure of March 2023, the company's current asset is 83,947. So we compare this with the current liabilities, that is which is 44,747. So company's current asset is 83,947. Company's current liabilities are 44,747. So it is round about 2:1. In every year, if you see that, if you take a quick glance, it is more or less 2:1, or in some cases it is more than 2:1. Now come to liquid ratio. In liquid ratio, what we do? We deduct the inventories. So but the company has very less inventories. So even if we deduct the inventories, the ratio is more or less same, means 2:1. So you can say that the company's liquid ratio is also 2:1. The company's liquid ratio is also 2:1. So what it means? The company's liquid ratio is 2:1. So what it means? It means the company has huge cash reserves at its disposal, which it is not likely to utilize. इसका मतलब कंपनी के पास जितना पैसा होना चाहिए उससे ज्यादा है और उस पैसे का वो इस्तेमाल नहीं कर पा रही है। तो इस वजह से टीसीएस और सारे आईटी कंपनी जिसके पास कैश बहुत ज्यादा है वो क्या करती है, उस पैसे का इस्तेमाल डिविडेंड को पे करने में करती है या फिर उसका बायबैक करती है। इसीलिए आपने देखा होगा, न्यूज़पेपर पढ़े होंगे, तो टीसीएस के जो है वो बायबैक के ऑफर्स आते रहते हैं और वो हाई डिविडेंड, अच्छा खासा डिविडेंड अपने शेयर होल्डर्स को देती है। So, liquidity position is good, but company has excess cash. Now come to solvency position. Solvency position में what we see in solvency position, we see the company's debt equity ratio. In solvency situation, we see the company's debt equity ratio. Debt equity ratio, debt upon equity. तो प्रैक्टिकल एग्जांपल से देखते हैं कि वेदर टीसीएस इज एक्चुअली satisfying this or not. Companies borrowings, it is, please see the March 2023 figure. Borrowing is actually 7688. अशोक, ये क्लियरली विजिबल है ना बैलेंस शीट? ठीक है। So, borrowing, the company's long-term borrowing is 7688 for March 2023. And if we compare this borrowing with the equity, that is the company's share capital and reserves, the equity is far, far more than the debt. So, debt equity ratio, if it is less than 50% of the equity, then it is considered good. Means company के पास ज़्यादा debt नहीं है. But the company's debt portion, that is 768, it is very small in comparison to its reserve, which is 90,058. So companies, you can say the debt equity situation good. Company solvency position is comfortable. Last aspect is cash flow statement in this financial analysis. Company's cash flow from operating activities, please see that March 2023 figure 41,965, and in case of every year, if you observe that cash flow from operating activity in case of Tata Consultancy Services from March 2012 to March 2023, the figures are positive. So it indicates that company's cash flow situation is very good. Investing financial activity is in the negative. It is basically because of dividend. The company is declaring a huge dividend to shareholders. See, the company paid dividend 3897 March 2012, and it has dividend distribution decreased to 41,410 in March 2023. So huge dividend declaration. That is why it is in the negative. So, but company's net cash flow is in most of the years is positive. So you can say the company's cash flow position is also good. The only aspect is that company's liquidity position is too comfortable. It has sitting on a huge cash reserves. So this is what company analysis is all about. We will continue with the other portion of this company analysis after this brief break of about 10 minutes. Thank you. Previously we discussed about this financial analysis. Now get back to the next point, that is competitive advantage. Now some companies got competitive advantage in comparison to other companies, and these companies have very good brand value. As you know, the companies which comes to mind which have very good brand value, in I will take international as well as India's example, are you can say Microsoft, which immediately come to mind. Microsoft, Apple, Google, Amazon, Tesla. So world's leading company, Samsung. So these companies have a competitive advantage, and it is in most probability, most likely that the shares of these companies will, you can say, increase in the future or will show a good stability. Means even if the prices decrease, it will not decrease by much, and if even if the prices increase, it will not show a very high spurt or very high increase. In Indian scenario, some of the companies which comes to mind is HUL, that is Hindustan Unilever Limited, ITC, which have very good brand value, and some of the high dividend paying companies which ultimately come to mind, which Dabur, uh, Asian Paints. Okay. So these companies have a competitive advantage in comparison to its peers, and therefore they are showing good profitability, sales, you can say liquidity, solvency position in comparison to its, you can say, peer companies. Now come to the quality of management. As I have said, that quality of management or the management analysis is the most important factor, if not more, then not less than the financial analysis. Because if the management is good, then it will be managed better, and it will ultimately lead to the high profitability and sales figure of the company. So quality of management is very important as in the case of financial analysis. So we'll devote some time to quality of management or the management analysis. Management analysis. Now, the first thing which the you can say an investor before investing in a particular company wants to know about the management is the, you can say, the sincerity, experience, and integrity of the person at the helm or the chief executive officer. So basic qualities look for is sincerity, okay, uh, experience, and skill. And then he does a background check, because आपको ऐसे नहीं मालूम चल पाएगा कि कंपनी का मैनेजमेंट कैसा है. सो यू हैव टू डू सम बैकग्राउंड चेक, एंड एज एन इन्वेस्टर यू हैव टू डू अ some amount of hard work regarding this. So a background check is done. तो इस बैकग्राउंड चेक में आपका क्या क्या आएगा? सबसे पहले, who are the promoters of the company? Who are the promoters of the company? Who are the directors of the company? How many directors are executive directors? And how many directors are independent directors? Next point, which is very important in management analysis, is management succession plan. Management succession plan. दैट इज, अभी जो सीईओ है उसके बाद कौन सीईओ बनेगा, किसको तैयार किया जा रहा है. मोस्ट ऑफ द कंपनीज आर वेरी ट्रांसपेरेंट इन दिस रिगार्ड. फॉर एग्जांपल टीसीएस, Infosys, they have a good management succession plan. And next come to salary of promoters versus net profit. Salary of promoters versus net profits. This is a very important factor. Company's net profit is very high. Then, and in the same way, the salary of promoters also high. Then that is all right. Company की profit भी ज़्यादा है, तो promoters की salary ज़्यादा है, तो that is okay. But if the net net profit is not high, or if the company is making losses, and the salary and the promoters are getting very high salary, then that is a red flag. Then it shows the inefficiency of the management, as in the case of ILFS. ILFS में क्या सिचुएशन थी, वो लॉस में थे, फिर भी प्रोमोटर्स को बहुत हाई सैलरी मिल रही थी. Another aspect of management analysis is the project execution, which shows the efficiency of the management. Project execution, and project execution is company's production capacity. What is the company's current production capacity, and the quantity sold by the company. So if the production capacity has been increased from the previous few years, so the quantity sold has been increased from the previous few years, then it shows the efficiency of the management, or it shows that the quality of the management is good. Excuse me. Another aspect which shows the efficiency of management is consistent high dividend, you can say. As I gave the example of some of the high dividend paying company, जो कि constantly investors को अच्छा dividend pay करती है, जिससे वो satisfy रहे. और ये कंपनी की एफिशिएंसी पे भी डिपेंड करता है, बिकॉज अगर प्रॉफिट रहेगी तभी कंपनी डिविडेंड पे कर पाएगी. और ये जो कंपनीज है कंसिस्टेंटली प्रॉफिट अर्न करती है, इसी वजह से वो शेयर होल्डर्स को हर साल अच्छा डिविडेंड पे कर पाती है. एकदम से जो दिमाग में ऐसे कंपनीज के नाम आ रहे हैं, दीज आर सम ऑफ द IT companies, good IT companies, TCS, Infosys, Wipro, they give good dividend to its investors, and Asian Paints, ITC, Dabur, they all give good dividend to its shareholders. Another very important aspect which shows the quality of management is that there is an increase in sale, and sales is increasing not because of the sales price, but increase in sales price, but because of the increase in quantity sold, the increase in the sales volume. So increasing sales because of increasing sales volume, because of increase in sales volume means ज्यादा से ज्यादा कंपनी जो है क्वांटिटी सेल कर रही है. सिर्फ कंपनी की सेल्स सेलिंग प्राइस से नहीं इंक्रीज हो रही है, सिर्फ सेलिंग प्राइस से इंक्रीज हो रही है, दैट इज अ रेड फ्लैग. सो इफ द कंपनीज sales is increasing because of sales volume, it shows the efficiency of the management. It shows that the production capacity has been fruitfully utilized. Whatever production has been taking place, that has been sold. So this is about the management analysis. I will give a brief of this. The first of all, you see the sincerity, experience, and skill of the management. You do a background check. Who are the promoters? Who are the directors? How many directors are executive directors? How many directors, independent directors? Whether the company has a good management succession plan or not. You made a comparison of this, as an investor, make a comparison of the salary of promoters versus net profits. That if the net profits are high, the salary of promoters are also high, then it is okay. But if company's profit is low or the company is suffering losses, then the salary of promoters will not be high. The case in this point recently, you have read in the newspaper also that the Wipro's, the Premji, that is Azim Premji's son, has reduced his salary by about 50% because the Wipro's profit was not that much. So this shows a good example. That shows a good efficiency of the, and it shows that the quality of management is good. It is conscious that yes, if the profit is less, then they are ready to accept this fact and ready to accept less salary. Another aspect which shows the good quality management is project execution, that whether the production capacity has been increased or not, whether the whatever production capacity is there has been fruitfully, productively sold or not. And another aspect which shows the good quality of management is the consistent high dividend, where the company is able to pay consistent high dividend. Only the companies which have been earning consistent profit are able to declare consistent dividend. That is the IT companies and some of the companies which comes to our mind immediately, such as Asian Paints, ITC, Dabur. And another, last but not the least, another important factor is the increasing sales. That increasing sales is because of increasing sales volume and not because of the increasing, you can say, the price of the sales, sales price. The increasing sales is because of increasing sales volume. Okay. Now come to the corporate governance. The corporate governance is also very important, and it is related to quality of management. If the quality of management is good, then the corporate governance will obviously be good. Now, okay. I was saying about corporate governance. No? So, corporate governance, what are the aspects which are looked into? Companies LODR, the listing obligation and disclosure requirement regulations by SEBI. The SEBI LODR regulation is important, that the company, whether the company is following the company's LODR regulations or not. This is also an important check on the part of the investors. तो investor ये check करता है कि company जो है listing obligation disclosure requirement SEBI की जो regulation है उसको follow कर रही है कि नहीं कर रही है. उसके बाद है कंपनीज की SCRA एक्ट. SCRA एक्ट मीन्स कंपनी सिक्योरिटीज कॉन्ट्रैक्ट रेगुलेशन एक्ट. Securities Contract Regulation Act, SEBI Act, and the Companies Act. तो कंपनीज एक्ट का पालन भी कंपनीज कर रही कि नहीं. तो ये चारों एक्ट इंपॉर्टेंट है. LODR, लिस्टिंग ऑब्लिगेशन डिस्क्लोजर रिक्वायरमेंट सेबी की, सेबी सिक्योरिटीज कॉन्ट्रैक्ट रेगुलेशन एक्ट, सेबी एक्ट, और द यू कैन से द कंपनीज एक्ट 2013. Regulations, it is related to corporate governance, as I've already explained. Regulations, some other aspect are followed, that the company is following all the regulations or not. If it is a manufacturing company, then it is following the various labor laws or not, for example. And if it is a listed company, whether it is following the LODR, Securities Contracts Regulation Act, SEBI Act, Companies Act or not. Or if it is exporting its goods to some other countries, it has to follow the Foreign Exchange Management Act also, which is called FEMA, Foreign Exchange Management Act. The regulatory aspect also to be looked into, and investor has to see that whether the company, before investing, and whether the company is actually following its regulations or not, or you can see it is in compliance with the various regulations which is applicable to it. Now the key point is location and labor management relations. Location and labor management relations, it also has a bearing. Earlier it was not given much of an importance, but in today's scenario, it is also been looked after by the investors. Location, if it is proximity, you can say, if the factory is in proximity to the godown, or the manufacturing site is in proximity to the warehouse, or you can say, so that is actually helping the company in cutting its cost and its efficient operation. Labor management relations is also important. It is paramount, or it is imperative on the part of the management to maintain a good relation with the labor, because अगर management के labor के साथ अच्छे relations रहेंगे तो labor अच्छे से काम करेगी और उसमें कंपनी की प्रोडक्टिविटी बढ़ेगी, प्रोडक्शन भी बढ़ेगी और वो ज़्यादा सेल्स कर पाएगी, और अल्टीमेटली कंपनी को प्रॉफिट ज्यादा होगा, जो कि उसके शेयर प्राइसेस में रिफ्लेक्ट करेगा, शेयर प्राइसेस भी बढ़ेंगे इसके। तो लेबर मैनेजमेंट रिलेशन बहुत इंपॉर्टेंट फैक्टर है, जो कि मैनेजमेंट को हमेशा इस बात का ध्यान रखना चाहिए कि लेबर के साथ उसके रिलेशंस अच्छे हो। जैसे कुछ समय पहले आपने देखा होगा, आपने सुना होगा इसका कि मानेसर प्लांट जो है उसका, मारुति का, वहां पे कुछ डिस्प्यूट हुआ था लेबर मैनेजमेंट रिलेशंस का। इस तरह के इंसिडेंट्स ना हो, ये कंपनीज को ख्याल रखना चाहिए। In the company analysis, the second last aspect is pattern of existing stock holding. ये भी important है, because if the promoter share, just listen very carefully, if the promoter share in a particular company is increasing, it means that the promoter knows that the company is doing likely to do well in the future. And if the promoters are reducing their holding, it means that the company is not likely to do well. ठीक है। तो इसका मतलब प्रोमोटर अगर किसी कंपनी में अपने शेयर्स बढ़ा रही है, इसका मतलब है प्रोमोटर को पता है कि कंपनी अच्छा करेगी। तो उस पर्टिकुलर कंपनी में एज एन इन जब कोई फंडामेंटल एनालिसिस कर रहा है इन्वेस्टर, तो वो उस कंपनी में इन्वेस्ट करने की सोचेगा। यस, प्रोमोटर की होल्डिंग बढ़ रही है, इसका मतलब उस कंपनी में इन्वेस्ट कर सकते हैं। अगर घटा रही है तो उसका मतलब प्रोमोटर सेटिस्फाइड नहीं है अपनी कंपनी से, तो अपने शेयर्स वो कम कर रही है। सो पैटर्न ऑफ एग्जिस्टिंग शेयर होल्डिंग से काफी कुछ पता चल सकता है कंपनी के बारे में। Let us take a brief example in this. This is if you see Tata Consultancy, the shareholding pattern. The promoters have not decreased their shares. In fact, they actually increased their shares from March 2022. So promoters are satisfied about the company till now. This is an indication actually. And what is the marketability of the shares? Marketability of shares means whether it is attractive and will attract the investors in the future. So marketability of the shares is actually dependent upon the other points which we have discussed just now. Now the techniques used in the company analysis. Various techniques are used in company analysis: correlation, regression, trend, and the decision tree analysis. Hmm. Hmm. Okay. In correlation analysis, the correlation between two companies are actually correlation between the profits of a company and the sales of a company are generally taking place, or you can say a correlation of the company's profit. Correlation with the company's profit and sales, or correlation between the company's profit and that of its competitor. And regression, as you know, is the, you can say, calculating the dependent variable on the basis of some independent variable. Yeah. So, in regression, I will take a brief example that regression means you can say value the dependent variable on the basis of some independent variable, or impact on say company's profit from government's PLI scheme, or production linked incentive scheme. So, as you know, the government under the PLI scheme or the production linked incentive scheme gives subsidies to the domestic manufacturers who manufacture certain products. For example, computer chips, which are used in the laptops. So these companies get good subsidy from the government, and because of these subsidies, they can curtail their expenses and increase their uh, profitability. So by regression analysis, you can analyze, as an investor, analyze the impact on company's profit. What will the impact on company's profit from the government's PLI scheme, the subsidy which the company is getting? So this is what regression analysis is. Correlation means correlation of the company's profit and sales, or the company's profit than that of its competitor, or correlation between the company's profit and the industry's profit. Okay. Trend analysis means a trend is judged, means a dependent independent variable that is calculated year on year basis. Means अभी जो आपने कैलकुलेट किया रिग्रेशन एनालिसिस मींस गवर्नमेंट की पीएलआई स्कीम का कंपनी के प्रॉफिट पे क्या असर पड़ा, तो ये ईयर ऑन ईयर बेसिस पे एक कंप्यूट करते जाए तो इससे एक ट्रेंड उभर के आएगा कि एक्चुअली कितना इंपैक्ट पड़ रहा है, 4-5 ईयर्स का फिगर रहेगा हमारे पास। तो ये बेसिकली ट्रेंड एनालिसिस है। थर्ड एस्पेक्ट जो है कि जो टेक्निक यूज होता है कंपनी एनालिसिस में, वो है डिसीजन ट्री एनालिसिस। सो आई विल टेक अ ब्रीफ एग्जांपल ऑफ डिसीजन ट्री एनालिसिस सो दैट यू कैन अंडरस्टैंड इट। डिसीजन ट्री एनालिसिस। सो बेसिकली जो कंपनी का डिसीजन ट्री एनालिसिस होता है, उसका मतलब क्या होता है? मतलब आप एक डिसीजन ट्री एनालिसिस से आप क्या समझते हैं कि इसका क्या मीनिंग है डिसीजन ट्री एनालिसिस से? तो डिसीजन ट्री एनालिसिस से आपको ये पता चलता है कि आप कंपेयर कर सकते हैं। तो डिसीजन ट्री एनालिसिस बेसिकली हेल्प्स इन द इवैल्यूएशन एंड कंपैरिजन ऑफ वेरियस ऑप्शंस एंड द रिजल्ट्स। So decision tree analysis helps in the evaluation and comparison of various results. Okay. Now let us take a brief example. Will the company's profitability increase? आपके मन में एक है जब आप कंपनी एनालिसिस कर रहे हैं कि will the company's profitability increases? The chances are, and whether it will, how much it will increase in 5 years, 10 years, and 15 years. In 5 years, it will increase by 10%. So what is the chance it will increase at 10%? In 10 years, it will increase at 20%. So what is the percentage chance that it will increase by 20%? So this is what decision tree is all about. I will take an example. Will will company's profitability increase? Will companies Will companies' profitability will companies' profitability increase in say 5 years? Will companies' profitability increase in say 5 years, 10 years, 15 years? 10%, 15%, 20%? 10 years में 10%, 15%, 20%? 15 years में 10%, 15%, 20%? 20%। सो अभी तक आपको क्या इसमें समझ में आया डिसीजन ट्री एनालिसिस में कंपनी की प्रॉफिटेबिलिटी बढ़ेगी कि नहीं बढ़ेगी 5 साल में? क्या तीन प्रोबेबिलिटी है, 10% कितना 5 साल में 10% बढ़ेगी कि 15% बढ़ेगी कि 20% बढ़ेगी? बढ़ेगी तो कितना बढ़ेगी? 10 साल में वही स्थिति है, 15 साल में वही स्थिति है। लेट अस देखते हैं। 10% बढ़ेगी, इसके चांसेस हैं 60%। 5 साल में 10% बढ़ेगी, 10 साल में इसके चांसेस हैं 70%। 10% बढ़ेगी 15 साल में, 10% बढ़ेगी 15 साल में, 80%। ओके, 5 साल में कंपनी की प्रॉफिट 15% बढ़ेगी, इसके चांसेस हैं 25%। 5 साल में कम और 10 साल में कंपनी की प्रॉफिट 15% बढ़ेगी, इसके चांसेस है 20%। और 15 साल में कंपनी की प्रॉफिट 15% बढ़ेगी, इसके चांसेस है 20%। नाउ 5 साल में कंपनी की प्रॉफिटेबिलिटी 20% बढ़ेगी, इसके चांसेस काफी कम है, 15% ही। 10 साल में 20% बढ़ेगी और चांस और भी कम है। 15 साल में 20% बढ़ेगी, उसके चांसेस ऑलमोस्ट जीरो है। तो डिसीजन ट्री एनालिसिस के बेसिस पे एज एन इन्वेस्टर आपको पता चल जाता है कि कंपनी की प्रॉफिटेबिलिटी कितनी होगी, कितने परसेंट चांस हो सकते हैं, उस तरह से हमें इन्वेस्ट करना चाहिए। तो तीन ड्यूरेशन बनाया गया है, 5 साल, 10 साल, 15 साल का। इन 5 साल में कंपनी की प्रॉफिटेबिलिटी 10% बढ़ेगी, चांसेस है 60%। और 5 साल में 15% बढ़ेगी, 25% चांस है। और 20% बढ़ेगी, 15% चांस है। तो इस तरह से तीनों ईयर्स की, मतलब 5 years, 10 years, 15 years के एनालिसिस के बाद यू गेट एन आइडिया दैट आफ्टर 10 years the company's profitability increases at 10%. Whether it is 5 years, 10 years, or 15 years, the chances are the company's profitability will not go beyond 10%, because for short term 5 years it is 60%, for long term it is 70%, for 15 years it is 80%. मतलब next 15 years the chances are the company's profitability may not go beyond 80%. So you can say that from the analysis of the decision tree, as an investor, while doing a fundamental analysis to find to take a decision on whether to purchase the shares of a particular company, that the company's profitability, the chances of increasing the company's profitability is high, but not more than 10%, whether we take a short term or a long term, short term, medium term, or long term. Now, before this closing this aspect of fundamental analysis, some of the red flags and warning signs has to be considered by the investors. And these red flags and warning signs are very important and has to be considered by the investors. So, but in order to red flag this warning signs, the investor has to go through the financial statements very thoroughly. Unless you go through the financial statement very thoroughly, you will not able to just point out these red flags. First red flag is that if a company is purchasing raw material from one related party and selling it to another related party, then it is an early warning sign. Obviously means raw material की जो डीलिंग हो रही है एक रिलेटेड पार्टी से दूसरी रिलेटेड पार्टी में हो रही है. ये कंपनी जो है कुछ रॉ मटेरियल कुछ भी बेच रही है अपने रिलेटेड पार्टीज को ही बेच रही है ज्यादातर. तो ये अर्ली वार्निंग साइन. इसका मतलब उस रिलेटेड पार्टी को किसी फिक्टिशियस बनाया गया है और किसी इट मे नॉट बी अ रियल ट्रांजैक्शन. Second is with regard to loans and advances. If loans are taken from a financial institution and given to a subsidiary, huge loans have been taken and all the loans are given to a subsidiary. So this is also a red flag because why the loans and advances are given to a subsidiary? Subsidiary को ही loans and advances क्यों दिए जा रहे हैं? तो ये इन्वेस्टर्स को थोड़ा सा देखना होता है कि क्यों ऐसा है. If it is the company is not able to provide a good explanation, then that is a red flag. Third aspect is if huge investment in fixed assets does not commensurate with the sales of the company and the production capacity of the company does not increase, it is a warning sign. Means fixed assets में कंपनी का ह्यूज इन्वेस्टमेंट है और वो जो ह्यूज इन्वेस्टमेंट है उससे कंपनी का सेल्स नहीं बढ़ रहा है और प्रोडक्शन कैपेसिटी भी नहीं बढ़ रहा है. दैट इज द वार्निंग साइन. इट मींस इट इंडिकेट्स द इनएफिशिएंसी ऑफ द मैनेजमेंट और इट इंडिकेट्स दैट द क्वालिटी ऑफ द मैनेजमेंट इज नॉट गुड. Or there may be some fictitious entries because sales is not increasing because if huge fixed assets is there, so it means the company is not efficient enough. It is not utilizing its resources properly. Another red flag and warning sign to be considered by the investor is that huge investment is made in a subsidiary and the objective of the holding company is not aligned with the objective of its subsidiary. हाँ, कंपनी ने जो सब्सिडरी में ह्यूज इन्वेस्टमेंट करके रखा हुआ है और पर कंपनी का ऑब्जेक्टिव कुछ और है और सब्सिडरी का ऑब्जेक्टिव कुछ और है. सो इट इज ऑल्सो अ ह्यूज यू कैन से अ वार्निंग साइन बिकॉज सब्सिडरी में इन्वेस्ट कर रही है कंपनी. क्यों सब्सिडरी में इन्वेस्ट कर रही है? कंपनी का ऑब्जेक्टिव और जो सब्सिडरी का ऑब्जेक्टिव वो मैच होना चाहिए पर वो मैच नहीं हो रहा है. इसका मतलब समथिंग इज रॉन्ग. Now, another red flag is that the subsidiaries in tax-free havens with no requirement of the maintenance of books of account. कंपनी की जो सब्सिडीज है वो उसने टैक्स फ्री हेवंस में बना रखा है जहाँ पे बुक्स ऑफ अकाउंट मेंटेन करने की जरूरत ही नहीं है. तो व्हाई वो कंपनी वुड डू दैट? व्हाई इट वुड मेंटेन बुक्स ऑफ अकाउंट इन सच countries in which there will be no such requirement? It means that the company wants to hide something through its subsidiaries. Some other red flags and warning signs to be considered by the investors. Sales are declining, but fixed assets are increasing, giving an indication that fixed assets are not properly utilized in operating activities. Yes. Sales are declining, but fixed assets are increasing. Fixed assets why fixed assets are purchased? Fixed assets are purchased to increase the production capacity of the company. But fixed assets are increasing means production capacity is increasing, but sales is not increasing. It means the management is not efficient. It means that the fixed assets are not properly utilized. That is why the sales are not increasing. Another point is that the company has unpaid tax liability, but it is paying regularly to the related parties. कंपनीज के पास अनपेड टैक्स लाइबिलिटी है, कंपनी के पास टैक्स पे करने के लिए पैसे नहीं है और वो रिलेटेड पार्टीज को कंटिन्यूअसली पे कर रही है. सो दैट इज ऑल्सो अ रेड फ्लैग. व्हाई इट इज रेगुलरली पेइंग टू रिलेटेड पार्टीज? And last but not least, the very important point is that the abrupt resignation of auditors. जो auditors का resignation है वो जल्दी हो रहा है. 2020 में, if you can recall, many auditors have resigned in most of the companies, in many companies, uh, such as Manpasand Beverages and all these. So before ending this, I will summarize it, the entire your PPT. So what is the fundamental analysis? Fundamental analysis is basically analysis of the company's economy, industry, and company. After doing this EIC analysis, which is economy, industry, and company, the investor do a valuation of the shares. This valuation is to calculate the intrinsic value of the shares. How this intrinsic value is calculated? Intrinsic value is calculated by you can say estimating the future dividends on the basis of the present dividend, and then the future dividends are discounted by using a discount rate to arrive at the present value. And this present value of shares, or the intrinsic value of shares, is compared with the market price to take a decision as to whether to purchase the shares of the particular company or not. So intrinsic value, for example, किसी कंपनी की intrinsic value अगर for example अगर 100 आती है, I will once again do it, कंपनी की शेयर 100 आती है इंट्रेंसिक वैल्यू, और करंट मार्केट प्राइस शेयर जो है कंपनी की फॉर एग्जांपल 90 है, तो इसको बेचना चाहिए, खरीदना चाहिए शेयर्स को? इंट्रेंसिक वैल्यू 100 है और करंट मार्केट प्राइस शेयर वो है 90. ओके, द आंसर इज यस. बिकॉज व्हाट इज द रीजन क्यों खरीदना चाहिए? Because the intrinsic value shows that the company share price will increase to 100 in the future. कंपनी की शेयर प्राइस फ्यूचर में 100 होने वाली है. अभी जो है कितनी है? 90. इसका मतलब अभी अगर खरीद लेंगे तो फ्यूचर में उसको 100 में हम बेच सकते हैं. तो दिस विल कंपनी, तो इन्वेस्टर को प्रॉफिट होगा, तो वो खरीदना चाहिए. तो इफ द करंट मार्केट प्राइस इज लेस देन द इंट्रिंसिक वैल्यू, buy the shares, and if the current market price is more than the intrinsic value, then sell the shares. Like intrinsic, we have taken example of intrinsic value also, how to calculate this. And before going through the economic, industry, and company analysis, two major points which have to be observed by the investor is that the general observation modes. General observation means whatever it is, you can say, they are in the companies. Was observation you have gone through by reading the newspapers, going through the various news channels, that is whether the company's profit has been increased or not. So these type of things, general observation. Modes means the competitive advantage which a company has over its competitors. For example, the Eicher Motors brand Royal Enfield bikes. So even if the prices of brand Royal Enfield bikes increases, the it will have much impact on its sales. Then we did the economic analysis, and in the economic analysis, we have seen the factors affecting the economic analysis, that is the GDP growth rate, the national income, growth rate of the industrial sectors also matter, and inflation. As we've seen that too much inflation is bad, and some amount of inflation is actually beneficial to the companies. Monsoon also plays a big role in economic analysis because good monsoon actually, you can say, impact the agri-based industries, which is beneficial for the rural economy. Then we see the various techniques used in economic analysis. Anticipatory survey. A survey is done, and it is actually on the survey of the you can say expert opinion on construction activities, expenditure on plant and machinery, and levels of inventory. Another approach of method of economic analysis is barometer or indicator approach. Three parts, there are three aspects of it: leading indicators, roughly coincidental indicators, and the lagging indicators. Leading indicators, they lead the economy, that it tells us what is going to happen in the economy in terms of GDP growth rate, interest rates, inflation, etc. Roughly coincidental indicators that what the economy actually is. That is, you can say the high economic growth rate coincides with the personal income. So if the economic growth rate is high, it will obviously lead to high personal income of the individuals. And lagging indicators is whatever happened in the leading indicators and the coincidental indicators affect the lagging indicators, reflected in the lagging indicators, we can say. For example, you can say low GDP growth rate and the low GDP growth rate and leads to high unemployment rate. Or you can say higher interest leads to higher interest rate leads to more money supply. Third method in this economic analysis is economic model building approach. In this, very methodical approach is followed, that is total demand is estimated, and on the basis of this total demand, the individual components of the GNP or the gross national product is forecasted. Individual components means private consumption, government expenditure, and all these individual components are aggregated, added to arrive at the forecasted GDP. Then this forecasted GDP is compared with the forecast or expert opinion of another consultant, and then a consistency is maintained. Then we come to industry analysis. Various factors are affecting industry analysis, that is product life cycle. As we see, there are three product life cycle: expansionary stage, maturity stage, and declining stage. So in India, the companies which are in the expansionary stage are the electric vehicles companies, because the huge push covered by given by the government in the electric vehicles and the huge infrastructure push. The companies affected are steel sector, iron sector, and the cement sector. In the same way, demand supply gap, barriers to entry, government attitude, state of competition, all affected. Government attitude is also very important, because government is giving a boost to the PLI scheme. That is, so those sectors which are covered under the production linked incentive scheme of the government, by which they get subsidiaries. The domestic manufacturers get subsidiaries when manufacturing the domestic component, by reducing their expenses and cost, are likely to do well. Similarly, cost conditions and profitability, technology and research. For example, all the companies are employing artificial intelligence, and those companies which rely more on artificial intelligence are able to increase their profitability. And those companies which keep a check on their cost are also likely to increase their profitability in future. There are two techniques used in industry analysis: regression and input output. When we came to company analysis, various factors are important: net worth and book value, sources and uses of funds, that is cash flow analysis. This cash flow statement is very important. We have seen with the help of example that the company's cash flow from operating activities should be positive. So as an investor, जो investor आप अगर fundamental analysis कर रहे हैं, तो एज एन इन्वेस्टर को देखना चाहिए कि कंपनी की जो कैश फ्लो स्टेटमेंट है वो पॉजिटिव है, मतलब कंपनी के कैश फ्रॉम ऑपरेटिंग एक्टिविटीज जो पॉजिटिव है, और कंपनी की नेट कैश फ्लो जो है, मतलब इन्वेस्टिंग एक्टिविटीज, फाइनेंसिंग एक्टिविटीज, ऑपरेटिंग एक्टिविटी में मिला के वो भी पॉजिटिव होनी चाहिए. Cross section analysis, size and ranking also is important. And in company analysis, various factors are important: growth record, financial analysis. Financial analysis, as I have seen, that it is very, very important. And the aspect which are seen is the company's profitability aspect, liquidity, solvency and cash flow. तो कंपनी की प्रॉफिटेबिलिटी एस्पेक्ट में क्या क्या चीजें देखी जाती है? कंपनीज की सेल्स रिकॉर्ड, ग्रॉस प्रॉफिट पिछले 10 साल में एटलीस्ट उसका 10% 15% से ऊपर होना चाहिए, 15% से ऊपर होना चाहिए आइडियली कंपनी की प्रॉफिटेबिलिटी पोजीशन। कंपनी सेल्स प्रॉफिट 15% से ऊपर है, कंपनी रिटर्न ऑन कैपिटल एम्प्लॉयड रेशियो अच्छा है, कंपनी का रिटर्न ऑन इक्विटी अच्छा है। देन कम टू लिक्विडिटी, कंपनी जो है कंपनी का जो इंटरेस्ट कवरेज रेशियो है एटलीस्ट 3.3 है, मींस कंपनी का जो ईबीआईटी है वो एटलीस्ट जो 3 गुना इंटरेस्ट को कवर कर रहा है। तो इंटरेस्ट कवरेज रेशियो, करंट रेशियो शुड बी 2:1 एंड लिक्विड रेशियो शुड बी 1:1। तो कंपनी का लिक्विडिटी एस्पेक्ट है। सॉल्वेंसी एस्पेक्ट में हम देखते हैं कंपनी का डेट इक्विटी रेशियो, कि कंपनी का डेट बहुत ज्यादा तो नहीं है, तो वो कम से कम 50% से नीचे होना चाहिए इक्विटी से, इक्विटी का कम से कम हाफ होना चाहिए। एक्सक्यूज मी। और एक और जो एस्पेक्ट जो देखा जाता है वो इसी में कैश फ्लो स्टेटमेंट, जैसे कंपनी का कैश फ्लो फ्रॉम ऑपरेटिंग प्रॉफिट पॉजिटिव होना चाहिए और नेट कैश फ्लो भी पॉजिटिव होना चाहिए। और उसके बाद कुछ और फैक्टर्स भी हैं जो कि पर इंपॉर्टेंट फैक्टर्स, क्वालिटी ऑफ मैनेजमेंट। सो व्हाट डू वी सी इन द क्वालिटी ऑफ मैनेजमेंट, वेदर द मैनेजमेंट इज एफिशिएंट और नॉट, व्हाट डू वी सी? We see whether the top management is sincere, experienced, and skilled. We see the company's management discussion analysis report also. We do a background check as an investor. For example, who are the promoters of the company? Who are the directors of the company? Who are the company's independent directors? Who are the company's executive directors? Companies, whether the company has a good management succession plan, means क्या हमें पता अभी जो करंट सीईओ है उसके बाद फ्यूचर सीईओ कौन बनने वाला है, ठीक है। देन कंपैरिजन ऑफ कंपनीज प्रॉफिट वर्सेस यू कैन से सैलरी ऑफ प्रोमोटर्स। अगर कंपनी की प्रॉफिट ज़्यादा है और प्रोमोटर्स की सैलरी ज़्यादा है तो कोई बात नहीं, पर कंपनी को लॉस हो रहा है फिर भी प्रोमोटर्स की सैलरी ज़्यादा है तो ये ठीक बात नहीं है, इसका मतलब कंपनी की मैनेजमेंट एफिशिएंट नहीं है। एंड और क्या क्या देखते हैं, देखते हैं कंपनीज सेल्स, मीन्स कंपनी की प्रोडक्शन एग्जीक्यूशन, दैट इज कंपनीज क्वांटिटी। एंड अनदर वेरी इंपॉर्टेंट फैक्टर इज दैट कंपनी की जो सेल्स इंक्रीज हो रही है वो सेलिंग प्राइस की वजह से नहीं इंक्रीज हो रही है, कंपनी को सेलिंग इंक्रीज हो रही है वो सेल्स वॉल्यूम की वजह से इंक्रीज हो रही है। इसका मतलब कंपनी अपनी प्रोडक्शन बढ़ा रही है और जितना प्रोडक्शन बढ़ा है उसको सेल करने में कंपनी सक्सेसफुल है। तो ये भी मैनेजमेंट की क्वालिटी को दर्शाता है कि अच्छी क्वालिटी, मैनेजमेंट की क्वालिटी अच्छी है। लास्ट बट नॉट द लीस्ट, क्वालिटी ऑफ मैनेजमेंट और मैनेजमेंट एनालिसिस में होता है कंपनी इज वेदर द कंपनी इज पेइंग consistently good dividend. If the answer is yes, then it also shows the efficiency of the management. क्योंकि साल दर साल प्रॉफिट कमाना और साल दर साल शेयर होल्डर्स को डिविडेंड डिक्लेयर करना वो आसान बात नहीं है, हर कंपनी नहीं कर पाती है। पर जो कंपनी कर पाती है, इट शोज दैट द कंपनीज मैनेजमेंट इज एफिशिएंट एज द आईटी कंपनीज एंड सम ऑफ द कंपनीज व्हिच कम्स टू माय माइंड instantly is Asian Paints, Dabur, ITC Limited. These are the companies which consistently paid good dividend to its shareholders. पैटर्न ऑफ एग्जिस्टिंग स्टॉक होल्डिंग में देखा कि हम लोगों ने देखा कि ये भी दिस इज ऑल्सो वन ऑफ द इम्पोर्टेंट फीचर्स, बिकॉज इफ द प्रोमोटर इज इंक्रीजिंग हिज होल्डिंग्स इन अ पर्टिकुलर कंपनी, इट मीन्स दैट इट इज the promoter is confident that the company will do well in the future, and as an investor one may invest in the shares of such companies. And if the promoter is reducing stake, it means the promoter is not confident about the future prospects of the company, and as an investor you may skip that company. Techniques used in company analysis is correlation, regression, trend analysis, and decision tree analysis. We have seen through with the help of an example also. Red flags and warning sign हम लोगों ने देखे इसको डिटेल में. So this is what all about. Before beginning with the assignment, I will say how to contact us. If you have still any query which is lurking in your mind, kindly contact at sfm-final@icai.in, or you can also call us at 0120-3045-956. So email ID and this phone number is front of you. You can contact us anytime. Thank you for your patient listening. And now just spare some of your time to go through the assignment. अशोक जी, हाँ मैं थोड़ी देर के लिए ना म्यूट कर रहा हूँ इसको, आप ना वो कर देना, इसको एडिट कर देना। मैंने असाइनमेंट मुझे डाउनलोड करना पड़ेगा, असाइनमेंट इसमें है नहीं मेरे पास, ठीक है? मैं थोड़ा सा टाइम ले रहा हूँ। Okay, now this after this presentation, please look into this assignment. Just try to solve this. I will discuss this, and whatever we have studied is just revision to the assignment. Just I think you must have tried to solve it, and we will discuss. Okay. Now the first question is India's GDP growth rate is expected to decline this year from what is was projected. Considering the present situation, what will be your likely forecast for the India's current economic situation? Uh, if you see that uh, the growth was earlier projected to 7%, but various experts have curtailed the growth rate to 6%. Further, the recession the world over has been engulfed. In USA, there is recession. Eurozone, the recession is there. Recently, the news has surfaced that the Germany is also in the grip of recession. So there is recession worldwide, and this will, to some extent, affect India's economy also. So that the investors have to guard against. Another factor is that various experts have suggesting that the inflation may ease. So this has to be wait and watch policies, because most of the households or people are not convinced, because the prices of food grains have not shown much decrease in its value. But the another worrying factor is the demand for luxurious goods and the demand for the luxurious items such as luxurious, you can say, housing and luxurious cars. This is because the income of some of the people has been increasing, while the income of the middle class have not shown much increase. So जो ऑलरेडी जिनके पास पैसा है वो पैसा बढ़ रहा है, जो हाई नेटवर्थ इंडिविजुअल है उनकी संख्या जो है 15 to 20% हर साल बढ़ रही है. So that is why the demand for luxurious commodities such as luxurious homes and luxurious housing are increasing, and the demand for the affordable homes and affordable cars are not increasing in that proportion. So I think this answer to question number 1 is more or less clear to you. Now come to the second question. According to you, which industrial sectors are likely to do well in future in view of the present situation? The sectors which are likely to do well in the present, considering the present situation, if we see that, first is the government PLI scheme, which are under the production linked incentive schemes of the government, which are under the PLI schemes of government, are likely to do well. Second is where the government is giving huge infrastructure boost. Infrastructure boost, such as steel, cement, iron ore, real estate. Third, the banking sector is likely to reduce its NPA, and the government is also pushing for the banks to reduce its uh, through the RBI to reduce its NPAs. So the banking sector is also likely to do well. Artificial intelligence, the AI sector is also likely to get a boost from the government, and actually government is encouraging this sector very much. So those in the artificial intelligence sector will likely to do well. And last not the least, EV, that is electric vehicles. So auto companies which are in the electric vehicles are likely to do well. So considering the present economic and industrial sector, these are the sector which are likely to do well in the future. Now come to the third question. Just go through the question. It is basically based upon the financial analysis that from the following information of ABC Limited to a company analysis, and decide whether it will be feasible to invest in the shares of the company, citing the various pros and cons. First of all, the figures of 5 years is given. The sales figures of 5 years is given, and profit figures of 5 years is given, EBIT, the operating profit figures. So first step is to calculate the CAGR, compounded annual growth rate, and see whether it is feasible to invest in the shares of that particular company on the basis of profitability, and whether it is showing good CAGR growth rate. What is the criteria? CAGR growth rate for the, we can say for the last 5 years or 10 years must be above 10%. At least it should be, the increase should be 10%. 15 to 20% is good, but it should at least be 10%. So let us see. I hope it is visible to you. Ashok, it is clearly visible, the figures. Figures are clearly visible. Okay. Now, how CAGR is calculated? It is basically a simple formula: ending value divided by beginning value raised to the power. If it is 5 years, then raised to the power 1/4 minus 1. So it will be is equal to, we'll give a bracket, ending value, that is, which is F4, 10,465, divided by the beginning value. Beginning value is 9258. Bracket close, then raised to the power, bracket 1/4. It is 5 years. So figure 1/4 is taken because compounding has to be there from the next year. That is why 4 years have been taken, 1/5 minus 1. So 0.03, or it is coming to 3%. The profitability figure is 3%. Now just compute the CAGR of the profitability figure. Copy it from here, paste it. Again, apply the formula. In bracket, ending value 1677 divided by the beginning value, bracket close, raised to the power 1 divided by 4. 4 years, because compounding is taking place from the second year only, minus 1. So it is 2.3%. So EBIT figure is, you can say sales figure is compounded growth is 3%, and EBIT figure, profitability figure, growing at 2.3%. So profitability position is not at all satisfactory. See, this is the formula by which CAGR has been calculated. This ending value F4 divided by B4, that is beginning value raised to the power 1 by 4 minus 1. So if the figures are 10, then it is taken raised to the power 1 by 9. It will be okay. So EBIT figure is not good. Now we'll come to the liquidity aspect. If we see the liquidity position, the general criteria is that the EBIT should be at least thrice the interest expenses, at least. So what is the EBIT or the operating profit? So EBIT is 1677 and it is 490. So we can see in all the cases, it is more or less 3 times. So you can say EBIT is easily covering the interest expenses. So you can say the interest coverage ratio is more or less good. Interest coverage ratio is EBIT upon interest expenses, and it should at least be thrice the interest expense. So 1677 is more than 3 times of 490. So you can say interest coverage ratio is okay. Now, in order to judge the liquidity, we will also compute the current ratio and the liquid ratio also. Current ratio, current assets upon current liabilities. Current assets of 2022, this figure 5793, current assets. Hope it is visible to you. This current assets 5793 divided by 3471. Please see the figures of 2022. The current assets is 4207 and the current liabilities are 3471. So it is more or less twice, but less than twice, you can say. All the figures are less than twice. But it is, you can say it is about 1.5 current ratio. Now come to the liquid ratio. Liquid assets are also more than current liabilities in almost all the cases. So you can say the liquidity position is more or less okay. Now come to the solvency part. Solvency part, we generally judge the company by way of solvency ratios on the basis of debt equity ratio. So debt equity ratio, debt upon equity, that is 8859. This figure of 2022, let us take is 8859 divided by 5466. So it is, debt is more. So debt should at least be less than 50% of the equity. The general criteria is that the debt should be at least less than 50% of the equity figure. But here, in case of this company, the debt is actually more than the equity. So on the basis of solvency also, the company is not doing well. And if we can see the cash flow from operating activities, it is less than the previous year. In 2021, the cash flow from operating activities is 2240, and in this year 2023 it is 1823. So it has been slightly decreased, but it is still positive. So you can say the company's cash flow position or liquidity position is good. So we can say that from this financial analysis that the company's cash liquidity position is good. Liquid ratios are good, interest coverage ratio, current ratio, liquid ratio, and cash flow state, cash flow from operating activities. All these are showing positive signals, but the company's long-term liquidity, the solvency is not good because debt is more. Interest coverage ratio is okay, but the debt is more, and the aspect which needs the urgent attention of the management is the company's, can say, sales and the profitability figures. The sales has been increasing at 2 to 3%. Sales has been increasing at 3%. Profitability has been increased at 2%. So this is a cause of concern for the investor. So investor may likely to skip this company. So we can say that in this company, profitability, if we judge this company from the point of view for profitability, we see that the company's compounded annual growth rate, CAGR, of sales is 3%, and compounded annual growth rate of EBIT or operating profit is 2.3%, which is actually very low. Then we did an analysis of the company's liquidity. The liquidity position is interest coverage ratio. Interest coverage is good, about thrice. Current ratio is equal to about 1.5:1, which is good enough. Company's liquid ratio is about, can say it is 1:1. So liquidity position is good. Liquidity position is good. Now come to solvency. Solvency, you analyze it on the basis of debt equity ratio. Debt equity ratio, debt upon equity, it is actually more or less 1.5:1. The debt is about, तो debt जो है करीब 1.5 गुना है इक्विटी का. So what it shows that the company's solvency position is not okay. In the long term, the company will find it difficult to pay its debt. Short-term liquidity is okay, but long-term liquidity solvency position is not okay. And when we analyze it from the cash flow statement point of view, if we analyze it on the cash flow statement point of view, it is okay. It is okay since it's okay because cash flow from operating activities is positive, therefore. So what is your analysis from the point of view? So what is your brief analysis, or what is your opinion as an investor? What will be your opinion? Most probably opinion may differ from person to person, but the general opinion should be on the account of profitability, because we have not seen the return on capital employed and return of equity, but from the whatever figures are, whatever we have deduced from the figures of sales and profit. So profitability position is actually not good. And if we judge it from the basis of liquidity is good. And if we judge it from the point of view of solvency, not good, because the debt equity ratio is high. The company may find it difficult to pay its debts in the long term. So debt equity ratio is, or solvency position is not good. And cash flow is good. So yes, the liquidity position of cash flow is good. Company has short-term cash flow, has cash in hand, but the company's profitability and solvency is a cause of concern. So as an can say investor, one may be inclined, or one may skip this company. So one may not. So the verdict may be, in most of the cases, the investor might be reluctant to invest in the shares of this company. And the last question is, the assignment is, while evaluating an annual report of a company, Point out the red flags that should be considered by an investor before investing by giving suitable explanation. So, as an investor, before doing an economic analysis, company analysis, industry analysis, one should, or especially while doing a company analysis, one should be thorough with the company's financial statements. Uh, if thorough analysis of the financial statement is done, the red flags can be pointed out. Some of the red flags are the related parties, the company's related parties are doing transaction among themselves. Means the company is selling goods to its related parties or it is purchasing goods from the related parties. So mostly transaction takes taking place within the related parties. So it is a red flag. It does not show the company's efficiency. Second red flag may be the company's investment in fixed assets are increasing, but company sales are declining. So what did it show? It also shows the inefficiency of the management, means the quality of the management is not good. Means company is investing capacity, but somehow the production might not be able to increase its production, and consequently its sales is suffering. Another aspect, a red flag, is that the objective of the subsidiary, the objective of the company is not aligning with its subsidiary. The company के जो objective है वो subsidiary के objective से मेल नहीं खाते हैं. पर कंपनी जो है ह्यूज इन्वेस्टमेंट सब्सिडरी में कर रही है, मतलब फाइनेंशियल इंस्टीट्यूशन से लोन ले रही है और सब्सिडरी को दे रही है, जबकि दोनों के ऑब्जेक्टिव में कोई मिलान नहीं है. इट्स ऑल्सो अ साइन ऑफ रेड फ्लैग. अनदर एस्पेक्ट इज दैट द कंपनी, द सब्सिडरी इज इन टैक्स हेवंस. मतलब ऐसे जगह पे है कंपनी की सब्सिडरी जहां पे बुक्स ऑफ अकाउंट मेंटेन करने की जरूरत ही नहीं. पर माय क्वेश्चन इज व्हाई दिस इज सो. ऐसी जगह पे क्यों रखा जाए बुक्स, मतलब सब कंपनी सब्सिडीज को ऐसी जगह पे क्यों एस्टैब्लिश करना चाह रही है जहां पे बुक्स ऑफ अकाउंट मेंटेन करने की जरूरत ही ना पड़े, जिससे इन्वेस्टर्स को पता ही नहीं लग पाए. इट मींस द इंटेंशन ऑफ द कंपनी इज नॉट गुड ऑन दिस पॉइंट. व्हाई वुड द कंपनी वांट्स टू डू दैट? एंड अनदर रेड फ्लैग इज दैट एब्रप्ट रेजिग्नेशन ऑफ ऑडिटर. अगर कोई भी ऑडिटर कंपनी के बीच में एक, मतलब रिटायर होने के पहले ही अगर वो रिजाइन दे देती है, देन इट डज नॉट बोड वेल फॉर द कंपनी. इट मींस दैट द कंपनी में कुछ ना कुछ गड़बड़ जरूर है. कोई भी ऑडिटर जो है कंपनी को बीच में छोड़ के नहीं जाना चाहती है. नो ऑडिटर वुड वांट टू लीव द कंपनी before its tenure. So if the auditor has resigned abruptly before his tenure ends, then it shows that something wrong is going in the company and it is a red flag. So these are some of the situation we have explained, the red flag which the investor to consider. So we have taken all the assignments considering the economic situation, industrial situation. We did a practical question on the how to analyze a company, financial analysis. We do the management analysis in detail also. The red flags also show is related to management analysis, also reflects upon the quality of the management. So this is all about today's lecture. If you have any query, please feel free to ask. We have shared the contact numbers to you. This number, kindly share your doubts, your queries. If anything you were not able to understand or you want more explanation on any of these, kindly email at sfm-final@ici.in, and you can call us at 0120043045 956. Thank you so much. Thank you for patient listening. Thank you.